Hello, hello, hello. Hopefully some of you were able to get our email last week. We had a big transaction we were working on for quite a while, actually. It took almost a year for that bad boy to close. And that's just how, when you're working with big institutional type buyers, that's how long really it takes with them. Yeah, you'll get your price, but you have to go through a due diligence phase, which is just brutal in my opinion. So, but we got through it, and I listed everything about that transaction on my last email. And basically why I deliver that information is just to help you understand how I got that deal done. Guys, you don't need millions of dollars to get these deals done. You just have to be creative enough about them to get them done. So I am sharing everything in our email. Unfollow the herd. There's a nice little sheep there is the mascot. And basically it's just an email that's like just unfollowing the herd, right? Like a contrarian mindset. So just thinking differently about transactions, thinking differently about, how to get these deals done. You can execute these deals without millions of dollars. I've proved it. I'm trying to share that. I'm sharing everyone my journey of like unfollowing the herd. That's what I'm doing each day. I'm just trying to document everything as I'm doing it. My struggles, the good things that are happening, and the bad things. And I think everyone, and I share it in these emails, I share it on these lives, I share it in podcasts. So make sure that you guys are following us. I know it can help a lot of entrepreneurs, people in business. I'm up in the North Dakota market, so it's a smaller market, more close niched market than these really big markets out there. But it just shows you the struggles of normal business ownership in these types of markets. I'm up in North Dakota, so I kind of share in these deals on like how I 1031'd from selling this real big car dealership that I owned. It wasn't anything I wanted to buy. I don't have any experience in flipping car dealerships. And it was a vacant car dealership, so there was no revenue coming in. So I share in that how I actually flipped it to make a profit. It wasn't my intention. I was hoping to lease out the space, but you know what? You have to cash out at some point, and if it's lucrative enough, you just have to execute that deal, and that's what happened here. So I 1031'd out of the deal into a luxury storage project that I'm going to be building in Fargo. So guys, anyway, go to my LinkedIn profile, find me a link tree. We'll probably post it below. Jen will do that for me on how you can find that email. And I share all the details of that, even like literally the closing statements. So complete transparency is what I'm looking for. Guys, and if you want to if you're looking to do a storage deal, like my total goal is to own over 2 million square feet of storage space in the next 5 years. I'm hoping even 3 years, but being realistic, next 5 years, that's what I want to have. And I need either good partners with me who want to do that as well. So whether it's a capital partner or maybe you have a deal, whatever, we can partner up with you, or maybe you're just looking to invest in these types of assets. You can also work with us in the investing portion if you know nothing about, if you don't want to be an active partner in the deal. So DM me the word invest if you're like a limited guy, limited investor where you don't want to deal with the operations, or DM me the word partner if maybe you have a deal or maybe you want to team up with me on a deal. And I can let you all know all about that in the DM. So go ahead and leave me a DM when you're able. So this weekend.
We have a quick question.
Yeah, what's up?
So Ethan asked, are you looking into only North Dakota? I have a possible storage unit facility in Alabama.
Alabama. Yeah. You know what? Storage, it's a boring old asset class where, basically these boomers own these things. A lot of them anyway. They're getting sucked up pretty fast, but a lot of them don't introduce any technology, the guy's still got to meet you at the storage unit and give you your little lock and sign here, where we can introduce some technologies. Of course, everything's advanced way further than that now, trying to build everything into automation. But Ethan, if you want to share it with me, share it in the DMs. That way it'll get pushed into the right area so I find it. And But yeah, I'm looking to partner up with people on it. And or if you want to just passively invest in these deals, you let me know. I offer both services to help everyone retire in half the time. That's my whole goal here. So, but lots of boomers getting rid of these things, and I'm willing to suck them up. So if you got storage deals, let me know. I'll team up with you for sure. Alabama's, I guess the markets that I look into to answer the actual question, North Dakota, South Dakota, Montana, Idaho, parts of Minnesota, just because we're close. I understand those markets well because we're in that proximity. We like Kansas, Tennessee, Florida, Alabama. I think is a friendly, investor-friendly state. I'm going to be biased towards the places that are investor-friendly because that's where our investors want to go, and that's where we want to park money, right? So, if you guys have deals, I'm not going to limit to nationwide, but I'm going to just say investor-friendly states. We're into it. So, storage, of course, you don't need a lot of personnel to get that done. Usually a little bit of property management in those markets, and you usually can get the deals done. So, but I want to get to something I was doing this weekend. So, I didn't meet this gentleman, but I was introduced to him. I've heard of him a few times through Grant Cardone, Ryan Pineda. He was on his podcast, and a gentleman called Rob Khalif. So he does. He basically does a lot of coaching in the real estate space, but he's got 4,000 doors. He understands. He was wiped out, no weight. Basically came back pretty resilient from there. Got a bunch of deals done. And knows all about multifamily. So not necessarily storage, but this was all about multifamily just because I always want to keep my game at the top, tippity top. And this was like a $47 course. The problem was it wasn't the money. It was 14 hours of this course. Well, a lot of it was mindset is what Rob teaches, which I think is the limiting belief for most people. Most people don't believe they can do $1 million deal because they're not worth $1 million, or they don't have $1 million, or maybe they're just like, I don't want to go further in debt. Well, and he was saying, I was like, yeah, that's probably true. And some of our, some of my mentees and students, they're always like, I just can't do it. I just can't fathom what happens if you don't have anything to lose at that point. So it's like, that's the time you should be offering the guy with a $3 million property $3.5 million. If he's willing to finance the deal and it calculates out the deal can't fail, but if the deal calculates out and they're willing to back you to get this deal done, so in 5 years they can be bought out for $3.5 million. If you have some creative ways to adding value to that property, get the deal done. But the mindset in the beginning is just taking the step. You're only limiting yourself on why you can't get these deals done. I promise you that if you started thinking bigger, and once you start thinking bigger, you realize a lot of these small deals take just as much energy, if not more in some cases. And they're very thin, almost where you have to property manage them just to get them to pencil. You have to do all these things for free just to get the deals to pencil. And you're obviously not valuing your time, because your time is worth something. If you're having to manage 3 duplexes and, you're getting vacancy of 50% for 3 months at a time. And that's pretty much probably all your cash flow you would have made. So with that being said, these small deals can take just as much. Is there a weird ringing?
No.
Okay. Sorry, it was just some feedback from the microphone then. He talked for 3 hours about mindset, and it's just thinking small takes a lot of work. It takes just as much work as thinking big. And when you can think a little bigger, think a little further, think a little more uncomfortably, you will reap the benefits. You'll be so excited that you've done that faster. By thinking small, it just will limit you on how far your growth can go. So instead of saying in 5 years, I'm going to take down 10 units, and these are probably 10 single family homes, because that's probably all you understand. Say in 5 years, you're going to take down 1,000 or 100, whatever you think that makes you what really makes you stretch. Because anytime you're doing 5 or 10 year goals, you should be really stretching yourself. because we always can get more done in 5 or 10 years than we can in one. We always underestimate what we can accomplish in the long-term vision. So use that as motivation for yourself to get bigger deals done. And like I said, I'm just preaching what exactly hit 3 hours of content of this. I was like, holy gosh. And I'm a big thinker myself, but it was a little overwhelming that most of the course was that, because I was like, I just want to know what markets you're looking in, how you're getting these deals done, and what are you looking for today, because the market's a lot different today than it was even a year ago. So I wanted the factual information, but it did get me thinking about my mindset again. So I think it's helpful for all of you to understand mindset, and just, you know what, thinking a little bit bigger is fine. It's uncomfortable, but it does pay off in the long run. And when I started thinking bigger, even going back to Grant Cardone in 2017, I was thinking pretty small. I was just thinking about how to do more jobs as a contractor, try to make some more money. Where now I'm like, how do I keep more money? How do I make the most money as possible scaling with people and to leverage my time? And then how do I keep most of my money after and leveraging some of my money, right? Like, you just need to think bigger. And since 2017, I basically almost 6 years ago now, I've been able to 10x my net worth just by just thinking bigger, being out of my comfort zone. It's like, I bought this commercial building we're standing in, and I bought it for $1.1 million. Well, that to me, when I only owned homes, because my house was my biggest investment, I didn't understand that a house was not an investment, and it really isn't. It's a liability, and it should not be your biggest investment. Took me really out of my comfort zone. I was like, holy, I have to sign on a $800,000 loan or whatever, and I had to have 250,000. I don't remember all the numbers, but you can get a loan for 75 whatever percent of it, and I had to come up with a lot of cash down, and I was nervous about it, just for good reason. It was out of my comfort zone, but I realized that, you know what, I could creatively get this deal done. I had a good government tenant that was coming with me. There were some securities for me, and the buildings were full. I could actually reduce the amount of rent I had to pay. So I shifted in that 1 year from a small mindset to an investor mindset, long-term vision, long-term focused. And my life changed when I was able to change. I was actually able to refinance that deal 3 years later, and basically got all my money plus more tax-free. It's life-changing things. But real estate's a long-term game. When you refinance and you get most of your equity back, or even half, it's like, wow. That's pretty powerful stuff, and the property's still producing cash flow. So, but anyway, Rob talked about all these things, the life-changing moments, the stories of how his life changed, because he was into Lamborghinis and everything before the basically in 07, had everything. $10 million house at the time, which would be like $40 million nowadays. Talking about waterfalls in his house. Rob did well. And literally went to zero, literally went to sleeping in his car. So I don't know if any of you can imagine that today. It's like, holy, if all these banks fail and all our notes get called, like, this would be the worst real estate crisis happening. And it got me thinking, though. He talked about the banks a lot, because the banks, all these notes got called for this real estate. No one had the cash to just pay them off. Who's got millions of dollars just laying around to pay off a financial crisis happening? But we're in a financial crisis right now. And why that's important is because, I just heard like US Bank is like just all of a sudden got into the rumors of like they're in some hardship. I have a Tesla loan with the freaking US Bank. So I don't know what happens when a bank goes down and like no one buys their debts, because I think my Tesla loan, I got, it's like 50 grand remaining at 2.5%. And, it's like, it's one of the very few things that I have debt on, but at 2.5%, I couldn't not put debt on a liability like a Tesla. So, at the time it made a lot of sense. So that's why I did borrow a little money on the car. But we'll see what happens to US Bank. So all the best, but there's some other banks getting in the hurdle already. And what's happening right now? Well, commercial real estate has been a sector that's now in the visions of all these investors and all these big people up all the wealthy people. They're all saying commercial real estate's going to get affected. And it is, because commercial real estate's a lagging effect. So anytime you're talking about market cycles, real estate always rides about 6 months behind everything else. So if the stock market tanked, well, stock market, remember, sees 12 to 18 months in the future. So if the stock market, you get your economic cycles and then you get bottomed out, and then now you get kind of the stock market's been flat, or I would say up a little bit from the all-time bottoms it was. So I'd say we're like probably getting to the point where the stock market's probably going to, we're seeing all these earnings and these different things happening. But I think once we break through that, I do think the stock market is going to start going up again. That's probably in the next 6 months or so, maybe Q4. But commercial real estate kind of lags behind that. So as stocks are going up, real estate's still coming down, still getting corrected, right? Like you hear cap rate compression. Basically, cap rates are rising on the downfall, which means valuations of these buildings is dropping. So stocks will be going up, real estate will be going down. And how far it goes down, I don't know. There's such a limited supply, I heard. Here's the biggest problem about it is that all these good loans were taken in 2021, basically. These bridge loans, all this real estate debt. And $3.1 trillion is now due in 2023. So for all these real estate projects, well, the ones that are getting killed right now is office. Office is going to take a bath this year. There's not people renewing their leases. People need less space. They're downsizing. They're finding cheaper alternatives. They don't need the space. Even in my little 12,000 square foot office building here, less people need space. More people come to my space just to downgrade out of their big office, expensive office. So office is about to get killed, and that's likely a majority of this 3 million, maybe half of it, right? Like I don't know the exact ratio of it, but the interest rate's going to double. So what are you going to have in office? Well, you're going to have vacancy climb. Vacancy's already been climbing. I think in some of the big towns like San Francisco, New York, I've heard like 20-25%. They've never seen rates that high in office. And then all of a sudden you're going to have debt double on them. So their debt's going to go from 3% to 6, 3.5, maybe to 7. Who knows? And they're likely to collapse on these loans. They're going to lose the investors will lose their equity in these office buildings because the buildings will not have enough cash flow to cover their freaking debt, their new debt payment. So watch a lot of banks start owning these buildings or getting foreclosed on. And it's likely to add a lot of the pain to these banks that is lagging yet. It hasn't hit, but likely by the end of 2023, a lot of this office pain is going to hit. So it's not good news, right? Like this is definitely not good. But what is good? Okay, so these are why I love the asset classes that I do. Office can be great. It's great because they're long-term tenants, usually 5 years plus. Usually it's very stable. You don't have to chase for payments. But even I have some vacancy here that I've not typically seen. And I'm up in a small market, Grand Forks, North Dakota. So take this for granted. But I'm in, pretty efficient space. I'll say it's like probably about $13 a square foot, triple net. So it's fairly affordable, but there's some vacancy here. And as these office buildings come on, these banks are going to start foreclosing. It's going to take them down. So I don't know what U.S. Bank owns or if they own a ton of these cheap Tesla loans. Is that why they're going down, or is it because they did a lot of cheap mortgages? I don't know. But we're learning a lot about these markets, and things are getting hairy out there. So more or less, that's a transparency. We talked about that at Rob Khalif's program. Talked about that for a very long time, hours. But that's what's happening as these cap rates rise and the freaking debt payments explode. People are going to lose their equity in office deals. I think that's just plain and simple. So find a lot of opportunities. There's not a lot of opportunities with converting these offices into multifamily. It's difficult to do. Now, it has been done successfully. It's just difficult. But this is another reason, again, why, guys, I was just getting back to, I love storage deals and I love multifamily deals. You always need a place to live. Class B multifamily is always a good investment, and it's stable. Now and then I love storage, right? I do luxury storage. So I do a little bit higher end storage, which hopefully brings in a better longer term tenant. And that's what's happened. Most of our storage projects, we've had longer term tenants. Not many people have moved out. They enjoy their storage. They enjoy the other tenants. They enjoy the people that are there. Less riffraff, less theft, just different things that you have at self-storage facilities you have to deal with. It seems like in the luxury storage space that we've had really good luck with it. And now we're entering very good markets. We're entering markets like Fargo, Sioux Falls, Rapid City in the Dakotas. Also looking at Bozeman, Butte, and Montana, some areas in Idaho, and then even Kansas City, maybe Alabama, but just getting used to some of these markets and putting them in really good markets where there's an influx of people. So, because as people downsize, they got stuff to store. And if they don't want their stuff in a bad spot, people have a lot of pride in their possessions. So, but let's talk about some positive things since I love multifamily and storage deals. You guys all know that. Making sure if you're doing your own deals, like creative financing should be the only way that you're getting deals closed right now. Otherwise, you're going to have to plow 50% cash and borrow 50%. Like there's so many deals not penciling right now. It's crazy because you're getting these cap rates rise and you're getting debt more expensive. You want to make some money on these properties, you're going to have to reduce the loan to value. You're going to have to put more cash in. So to reduce some of that, if you don't have the money, figure out the solution to the seller. Maybe they want a certain price. Maybe they want certain terms because they don't want to get taxed. When they exit these properties, they get taxed hard. Try to solve the seller's problems. And guys, I want to just, again, subscribe to Unfollow the Herd. I tell you how I do deals, how I structure them, how I solve sellers' problems. You, again, even follow me on YouTube. I'm literally documenting how I'm doing these deals, how I'm adding value to the properties, how I'm getting the deals financed. And then I also have a coaching that I'm starting to offer. And I never thought of being a coach or a mentor, but I get so many people that ask me questions, want to work with me, want to do a deal. And I have a limited amount of space. I'm doing a little bit of one-on-one mentoring. I don't want to do a ton of this. But for the go-getters, the people are motivated to get stuff done. If you want an accountability coach, I will be a coach for you to make sure you can increase, get more done in shorter amounts of time. I pay hundreds of thousands of dollars of mentors each year, and I'm proud to say that. I've excelled my life much faster than most, and it's always, to my mentors, that's who've accomplished it for me. So, but I'm also going to be offering a lower ticket, like group coaching session, so we can get real estate deals done. Maybe it's in the Midwest, maybe it's in the South. I don't really care. All I want to see is that you guys succeed, have some cash flow, and have some real estate in your portfolio. So one day you're retiring a lot sooner than 59 and a half. So guys, hopefully you find this helpful. If you have, ask a question. That was kind of a lot of information. I'm still kind of getting back on task this week as I missed last week. I was getting some new hair inserted, which I'm fair to share. So if any guys out there thinning, DM me the word thinning and I'll help you. I'll set you up with hopefully an affiliate link from Bosley. But next week, I'm going to talk about branding, why it's important. What am I doing? You guys see me doing a lot of this stuff. Is it working? How much money am I actually spending every month? And like, is it actually working? Why are you doing it? So I'm going to be talking about that next week. So if you guys want to see why I'm doing branding, why it's important, follow us next week, Monday at noon. I'll see you guys then. Peace.